everyone, in this video I will be discussing the chapter 5, which is all about disbursement. So in this chapter we will be able to state the main concept and disbursement of government funds and also account for different modes of disbursement. So disbursement means an amount paid out of budgeted amount. So it constitutes all payment in cash in whatever matter that is through cash, check, and other means. It shall also be made through disbursement voucher or DVs or payroll which are approved by the head of agencies. So disbursement system starts when a government agency receives the notice of cash allocation or NCA from the DBM. So the fundamental principle for disbursement of public funds is the first one, which is all government resources shall be used only in accordance with the law and only for the public purposes. Second is trust funds shall be used only for their specific purpose. Third one is fiscal responsibility shall be strictly shared by all those exercising authority over the government agency. The fourth one is the use of government resources shall be approved by the proper officials. Number 5 is claims against government funds shall be supported with complete documentation. And the last one is all laws and regulation applicable to financial transactions shall be faithfully adhered to, including general accepted principles and practices of accounting management and fiscal administration, provided that they do not contravene existing laws and regulation. The entity's expenditure program includes expenses paid for via borrowings without the corresponding release of cash. Through a special budget, the loan proceeds cannot be utilized. The next one is the authority to disburse or pay. So an entity can make disbursement only after it has received the disbursement authority based on this following. The first one is notice of cash allocation or NCA. The second one is notice of transfer of allocation or NTA. The third one is tax remittance advice or TRA. The next one is non-cash availment authority or NCAA. The next one is cash disbursement ceiling or CDC. So authority in this part issued by DBM to agencies with foreign operations such as DFA and DOLE, allowing them to use the income collected by their foreign services post or FSPS to cover their operating requirements. So this is the entries related to CDC are the following, which we have here the book of DFA or the DOLE and also for the book of BTR.
So these are the basic requirements and certifications for disbursements. So the following are required when disbursing funds. The budget officer or the head of budget unit shall certify the availability of allotment. The chief accountant or head of accounting unit shall charge obligations against available allotment. So the aforementioned steps are taken to prevent overdrafts. When obligations exceed the available funds, an overdraft is created. Thus, overdrawn accounts are not permitted. And the chief accountant or head of the accounting unit shall certify the availability of funds or cash and the completeness of the supporting documents before the head of the agency or his authorized representative can enter into any contract involving the expenditure of public funds. Every expense must be approved by the chief accountant or the head of accounting unit. Certifications must be based on valid and properly authorized claims. Any certification for fictitious obligation is void, resulting for the officials to be dismissed from service and shall be held criminally liable. Others who are involved in the fictitious transactions are also liable. So the requesting and approving officials shall ensure that the disbursements are legal and conform to applicable rules and regulations. And the head of the requesting unit shall certify the necessity and legality of disbursements. Payments shall be made through disbursement vouchers or DVs or payrolls and supported by the original copies of supporting documents, and the head of the agency or his authorized representative shall approve all DVs or payrolls. We have here the different modes of disbursements, such as the checks, cash, and the types of cashless payments such as advised debit account or the ADA, electronic modified disbursement system or the EMDS, cashless purchase card system or the credit card, non-cash availment authority or the NCAA, and tax remittance advice or the TRA. Disbursements through check. Checks are used whenever payments cannot conveniently or not authorized to be made through cash or ADA. So we have here the two types of checks issued by the government entities. The first one is modified disbursement system checks, which are chargeable against the account of the Treasurer of the Philippines maintained with different modified disbursement system, government servicing banks or the MDS GSBs. And the second one is the commercial checks, which are chargeable against the agency checking account with GSBs. These are covered by income or receipts authorized to be deposited with authorized government depository banks or the AGDBs. All check drawings, whether released or unreleased to payees, including cancelled checks, are recorded chronologically in the checks or ADA disbursement record maintained by the cash or the treasury unit. So we have here an illustration example of the disbursement through checks. So entity A disburses 10,000 pesos for electricity expense, and the entries are as follows. So in the MDS check, the debit is electricity expense and the credit is cash modified disbursement system or the MDS regular. And in the commercial check, debit electricity expense and credit cash in bank local currency current account. So disbursement through cash. So cash disbursements constitute payments through cash advances, including payments out of petty cash fund. So cash advances are governed by the following rules. The first is cash advances shall be made only for a legally authorized specific purpose. That is payments for personal services, petty expenses, and MOOE for field operating requirements. Second one, cash advances other than advances for travels shall be given only to duly appointed disbursing officers who must be properly bonded. The amount of cash advance shall not exceed the maximum cash accountability under the bond. Only designated disbursing officers are allowed to perform disbursing functions, and only permanently appointed officials shall be designated as disbursing officers. A cash advance must be liquidated as soon as the purpose for which it was given has been served. Cash advances for payroll shall be liquidated within 5 days after the end of the pay period. Unclaimed salaries shall be refunded and issued officials' receipt to close the account. So cash advances for travels shall be liquidated as follows. For local travel, within 30 days upon return to the personnel's workstation, and for foreign travels, within 60 days upon return to the Philippines. No official or employee is allowed to go on an official foreign travel if he is due to retire within 1 year after the foreign travel. No additional cash advance shall be given to any officials or employee unless the previous cash advance given to him is first liquidated. Transfer of cash advance from one officer to another is prohibited. And the last one, a cash advance shall not be used to encash checks or to liquidate a previous cash advance. So we have here an illustration for disbursement through cash. So entity A disburses 10,000 pesos for certain expenses through cash advance. The entries are as follows.
So there are 5 types of cashless payments. The first one, disbursements through advice to debit account or EDA. Simply stated, an EDA is a permission to transfer money from the NCA bank account of the issuing agency to the bank accounts of designated payees, either within the same bank or across accounts with different banks. The following expenditure shall not be paid through EDA. The first one, payment of terminal leave and retirement gratuity benefits, remittance of GSIS, PhilHealth, and Pag-ibig contributions. The next one, payments to utilities companies, example, electricity, water, telephone, internet, petroleum, and the like. The last one is the other payables which cannot be conveniently or practicably paid using the EDA. So we have an example for this. The entity A pays 100,000 accounts payable through EDA. So the entry for that is debit accounts payable and credit cash modified disbursement system or MDS regular. So the second one is disbursements through electronic modified disbursement system. The MDS or electronic modified disbursement system, disbursements are made directly from the accounts of the BTR that are maintained with the Land Bank of the Philippines or LBP. Agencies subscribed under LBP's AMDS can make online disbursements for selected transactions. So the third one is disbursements through cashless purchase card or CPC system. The CPC system disbursements are made through the use of an electronic card, and that is credit card. The authorized credit card company is the Citibank. Guidelines in the use of CPC system are as follows. The first one, CPC purchases shall be only for specific eligible items and only with specific merchants. B. Only authorized individuals shall be allowed to use the CPC subject to monthly credit limits. And the letter C, agency officials who approve the CPC are jointly accountable with the cardholders. The letter D, the CPC system shall comply to and shall not in any way change the existing disbursements, policies, and procedures prescribed under the law. Letter E, the amount covered by the CPC shall form part of the cash advance levels of the participating agencies. The CPC shall not be used to justify the increase in cash advance levels of participating agencies. Letter F. The CPC shall initially be used for purchases of small value, non-common use items which are not available with a procurement service. Letter G. Unauthorized items purchased using the CPC shall be the personal liability of the cardholder, without prejudice to the revocation of the cardholder's privilege and the other penalties that the participating agencies may impose. Letter H. Participating agencies shall immediately inform the Citibank of any discrepancy regarding items which they dispute as having been procured using the CPC. So the letter I. Participating agencies shall ensure the timely payment of CPC billings. In case of delays, late payment charges shall be the personal liability of the employee directly responsible for the delay. The NCA shall never be used to pay late payment charges. Letter J. The cardholder shall submit all receipts from use of the CPC to the accounting unit. These shall be used in inspecting actual goods purchased and in paying credit card billings. And the letter K. The accounting unit shall check if the procured items are those allowed by the law to be purchased using the CPC and compare the charge slips with the amounts in the billing statements. And the letter L. In case the CPC is lost or stolen, the cardholder shall immediately notify the program administrator and the Citibank. The program administrator shall determine whether the cardholder was negligent and whether the cardholder's privilege shall be reinstated or permanently suspended. The cardholder shall be liable for any CPC charges during the period the card was lost or stolen. So we have an example for the CPC. An entity A purchases office supplies worth 10,000 through CPC. So the entry for that is debit office supplies inventory and credit accounts payable. When the entity A settles the accounts payable, you will record debit accounts payable and credit cash modified disbursement system or MDS regular.
Next is the disbursement through Non-Cash Availment Authority. Non-Cash Availment Authority or NCAA is the authority issued by the DBM to agencies to cover the liquidation of their actual obligations incurred against available allotments for availment of proceeds from loans or grants through supplier's credit or constructive cash. Disbursement through NCAA is also called Direct Payment Method or Direct Payment Scheme of Loan Availments. They are made through the journal entry voucher issued by the BTR to the agency to record payment of goods and services made directly by the lending institution to the supplier or contractor. So the GEV is recorded in the general journal. So here is the example of the NCAA. Entity A acquires communication equipment for 1 million on account and subsequently settles the account through direct payment scheme. So the entries to be recorded are the following for the book of Entity A and for the book of BTR. As you can see in the journal entry, no cash is involved in the acquisition of the equipment, settlement of the accounts payable, and recognition of the loans payable. The lending institution directly pays the supplier. Next is the disbursement through Tax Remittance Advice or TRA. TRA is used for the constructive remittance of taxes or customs duties withheld to the PIR or BOC respectively. Accounting for these allowances. These allowances refer to the expenditures made by an agency that are subsequently invalidated or disallowed by the COA because they are found to be irregular, unnecessary, excessive, extravagant, or unconscionable. It is recorded in the books of accounts only when they become final and executory. For example, Entity A acquired office supplies for 100,000. It was found out that the correct amount should have been 90,000. So, amount paid or entry to be made is 100,000 less than should be 900,000 equals the overstatement of 10,000. So, here is the entries to be recorded in the current year and prior period. As you can see in the journal entry, the accounting for disallowances by a government entity is similar to the accounting for current and prior period errors by a business entity. Accounting for overpayments. Sometimes overpayments or even double payment of expenditures do happen in agencies. This could be avoided with the institution of proper controls, but some could not be avoided because of built-in procedures. One example is the payment of payrolls. Payrolls are prepared in advance and some agencies pay their employees through the banking system. all these are done because before reports of attendance are submitted, making it impossible to know the exact amount to be paid in case there are absences without pay during the pay periods. In case of overpayments, refunds shall be demanded of the employees concerned. That would be all. Thank you for watching.